Phoenix took the team.
All right, ladies and gentlemen, welcome back. Chart Talk 79 coming at you quick. Let's jump right into it with the market outlook. So last week, huge reversal in stocks. This is 2 weeks ago here, this action, where we pulled in about 5% in the SPY. We pulled in much more drastically, a full 10% in the Qs, the NASDAQ. And then that Friday, we saw a major turnaround. And since then, we've been green ever since. It was clearly a shakeout at this point. You know, how could you ever know? We saw all these names coming 50% off highs and all these things. But look at that, right back at highs. The Dow Jones is on a tear. 7 straight green days, new all-time highs pretty much every day. So what we're seeing is the money go to the cyclical names, the value names, retail, travel, anything reopening related is getting the most love in this market. That's why the Dow is ripping. That's why the airlines are ripping. What are you thinking, Bennett?
Yeah, if you want to pull up that SPY chart, just a quick thing.
Yeah, 1 week I'm going to be ready for that. Not this week.
No, of course not.
Whoa.
No, I'm messing with you. Let me know when you have it up.
It's up.
All right, so again, path least resistance, as Shake already said, is higher. But again, a week or two ago, everyone was looking to sell. Market was going to crash. Now we're new all-time highs. So this is a great time where we continue to hold what's been working and just raise our stops to be prepared if and when that market does start turning again. So for the SPY, be very defensive, be verse 390. The real pivot is really verse 370. But those are two key spots to look to free up some cash when the market doesn't have these amazing days like we've had the past week. So that's just my little 30 seconds on the broad market. If you want to get into the top ideas, first one we have this Wayfair W.
I love this macro chart. It looks the weekly chart on this thing is so amazing. So it's kind of tricky on the daily. It trades very wide and loose. If this chart tightens up, it's a great setup. Right now, it's difficult. I love the name. I love the level right here. It's a really beautiful chart. It's just will it give us a tight enough setup for a tight risk entry with some big upside on the reward end. Mm-hmm. So if it tightens up, I love it. If it just goes, I probably let it go. But definitely watching this one closely. For
Wayfair, are you keeping an eye through that 340 area? Is it okay?
Oh yeah. What is this last high? The 343, that last high. I'm looking at that as the technical trigger. I don't look at this blow off top right here, that 369 high as real resistance. I'm looking at it more of this 343 area. So that's definitely the area I want to get involved if it sets up nicely.
Okay. Next up is this Beyond Meat.
So, I had this on the watch list this week. I did see it began bouncing off. Huge pull in from earnings, and then began to bounce off these lows. You had to buy it today if you wanted it. It looks like, I would want more consolidation to buy this thing. It's definitely not my favorite name with how much it came in from highs, but on the same side of that coin, because it came in from highs so much, it's probably due for a bounce. Mm-hmm. So it's still tricky name. I'm not looking at it this week for a trade.
Okay. What about this AbbVie?
Oh, my baby girl. Yeah, I'm long a cool $500,000 in this AbbVie. So this one was trade of the week. I got in this one March 11th. I think me and Heaven were in this one together. And we kind of sat in it Thursday, Friday, and then it triggered just perfectly today off the open. It went pretty early on. It showed us amazing relative strength to this 109. And then when the market was chopping around all day, it exhibited relative strength, closed at highs. And these are the type of cyclical names that have been, the big mega cap names and things like that have been, the ones leading this market. So this is in that space perfectly. So, this trade, the way it triggered today, it looks beautiful going forward.
Nice. All right, next up we got Apple.
Well, nice bounce today in Apple. Tech has not been the place to be. We know that. We know at this point, but at the same time, Apple at this major support, been a market leader for how many years. It looks good in this area, but the thing is, at this point, you have to give it to these lows, mm-hmm. the 116 lows. So that makes it tough. Makes it tough for an entry here. It closed at 124 today. So I think it bounces from this area, but I think you got to be in it. I don't know if the reward is there on the upside, but mm-hmm. It still looks good off support, I'd say.
All right. Next up, we have this PHM through this 50.
Oh, beauty. These home building stocks, the housing market's still going crazy. Home building stocks are beautiful right now, and this lead is set up through that 50 quarter area, huge macro level. That looks great. That's a really good looking chart.
Now, is this one you would give it versus that recent pivot, like verse 46, or would you think you have to give it the proper room versus that 42.
That's where it gets tricky. I'm glad you asked. For me personally, I'd give it to that 46, just because if it breaks that pivot lower, it probably chops around, needs a lot more time to break through this level and sustain a breakout through that area. But, again, 2 days higher makes it tricky, but it's a macro weekly level, so you got to give it some room. So, yeah, I think that 46 is a good stop for now if it goes tomorrow. Right. But, again, patience on this one. This is not a 10% a name day.
Yeah.
10% a day name.
So, sticking with the home builders, we have this TMHC, similar, flagging at all-time highs, kind of pushing through that IPO high from going all the way back to 2013. This is another one that's kind of a similar setup.
Oh, yeah. Let's see this monthly chart. Look at that. The monthly chart is beautiful. Look at that technical proficiency. Ah, man. On the monthly chart, begins to break above this level. Now it's trying to hold here and give us that secondary flag in this level. It looks really good. Yeah, you can't. I like. What was the other one? What was the one we just looked at?
PHM.
Been a long day. I like that one better just because, from a technical standpoint, it's within this consolidation still. Versus, what was the other one? It's been a long day.
TMHC.
TMHC versus this one. They both look really good though. I mean, they're two very good looking charts, both very viable. So I have no qualms with either, honestly.
Yeah. All right. DHR is next. So there's 220.
Oh, damn. That thing is tight. Hell yeah. This looks amazing. Huge, holding a huge support level. It was once a massive resistance level. We see it hold support here back in November. And now this consolidation at the support level, that's beautiful. That is beautiful. I'll talk about later why that's beautiful in my good trade and bad trade, my bad trade last week. But this DHR through 220 looks amazing.
All right.
Give an arrow. Give an arrow. Give an arrow.
All right, after DHR, we have MMC through 120.
Damn, so many of these charts. This is beautiful, too. This is what happens. All right, so this is such a great example. Everyone was asking me, what did I need to see for the bottom? What did I need to see this? Every bottom in the market history is different. They're all going to look different. They're all going to act different. Just like when we have these crazy black swan sell-offs, no one sees them coming. No one saw COVID coming, all these things. So now they ask me, what's a bottom look like? And you got to wait for the charts to come around. So you see how we just looked at the last 4 charts we looked at were just absolutely gorgeous. So charts are coming around. That's what you need to see. So it's very tough to pick a bottom off the market lows. But when you see the chart setting up, that's when you can put your foot back on the gas a bit. So this MMC looks beautiful through this 120. Looks amazing.
Yeah. So we got one more, this ACLS through 41.
What is this one? I mean, another really nice level. The problem with all these charts is that, they've been on a run. The market's been on a run. Dow's up 7 days in a row. And all these names are quickly going from support to resistance. So in 4 days, this closed at, below 35 and now closed today at 41. And I got to buy tomorrow 41. Where's my stop? The closest stop that makes sense is this 38 pivot here. But even so, that's cheating the risk. So, we're still in a difficult position for entries in that regard for many of these names like this one.
And that's even, we kind of talked about this in the chat the other day, where as we approach that major retest, like, for the S&P, for example, when we get back to that first major retest, 395, you typically get the chasers, the people that weren't willing to buy a few days ago. They want to come in now, but those aren't the strong buyers. Those are the late buyers, the guys buying, GameStop 300. They're not the strong people that are buying it early on. So you kind of get a couple of those days where it just seems so perfect. Everything's lining up. Everything has to go higher. And that often is that kind of shorter term top when things, again, as soon as you start to buy that perfect, buy, after those 5 or 6 days up, that's usually when, the opposite happens.
Now, are you in the camp? Do you think we're going to completely fail? I mean, you're talking about,
no.
Do you think we're just going to pull back for a buyable dip? What's your kind of thought process?
I mean, I think now that we took out that high, I think we keep putting in that new high as we've done the last few months. But for now, just again, if it wants to go higher, that's great. The stuff that we're going to keep holding. But for me, it's like below, SPY below 390. I'll be freeing up a lot of the stuff that I had because if we go below that, we're probably going to push back into that range, whether it's down to 380 or back to 370. But it's just I don't want to be back down to that move back down. I'd rather just kind of get off the ride first and let everything settle back out. But I still think, again, we're pushing new all-time highs. Path resistance will be higher. But just in the short term, 6-7 days higher, it's very hard to find those periods where it's going to be, 20 days in a row. We're going to get just green days back to back to back.
Right. Something that never fails to amaze me is just, since we're in the market every single day, seeing the crowd psychology change from like 2 weeks ago where it's world's ending, what are we going to do type thing. And now it's like, oh my God, I need to chase. I need to be in this, and it's just funny to see that every time these sort of things happen.
Yeah. All right. So back to some of the top ideas. Next one, we got this deck. DEC, actually, we're going to skip that one. It already went.
The thing went today. Yeah, that looked good. It closed at highs, closing through this level. Retail name. Retail has been killing it, as I said earlier. Looks great.
Yeah. Let's see. BMW is another one. We've been keeping on this base, this 140.5 area. Again, we kind of saw this very far from support. Support was 136. That 140 support, support buyback was like the ideal buy. So here it's a little bit tougher. I'll actually be buying this. I'll be looking to buy through this 149, 150 area, but again, I got to give it $5 kind of day one, where it's not as good of a setup, but it has just been a level that's been forming there for since almost last summer.
The weekly consolidation. I bet even the monthly chart is amazing on this.
Yeah, just this huge.
So knowing that it looks good on a monthly chart, you got to treat it like a monthly trade.
Yeah.
You got to be taking profit in months, and you probably got to give it that wide ass stop.
Yeah. So this is like tomorrow. I'll be buying some, but I'll be buying, like you mentioned, very light. Because I have, the real out is verse 130, 135. I can't really be cute with and buy 150 verse 145. Like it's not that type of trade for how long it's consolidated. But again, very big pattern. And then one of our members asked about AMSC through 26.
Oh, that's beautiful. That's a really nice chart. I like this. So a lot of these names we're seeing, they're getting to resistance too quickly, and it's tough to buy them. However, this one, it gave us these 1, 2, 3, 4 consolidation days right at this level. This actually looks really, really nice through that. What do you say? Through 26?
Mm-hmm. Yeah.
Yeah, I love that. I mean, that looks really nice because it gave us these 4 consolidation days in front of the level. That's what made it nice.
Yeah. The only thing is, I'm like looking back. The only thing I don't like is that they, like any long-term holder in this is just royally screwed.
I didn't.
I'm just zooming back. They split it in 2015.
Oh.
So if you like really zoom out, if you pull up like a monthly really quick, just so someone can see. So this is a good example where like we'll never buy Citigroup because even though it's at whatever prices a share, when they split that stock, anyone who has been a real long-term investor in this name, like anyone who's owned this stock pre-2013, is down 90% in the name because they split it. So this is when we see these splits, we kind of run for the hills. But again, on a short-term swing, you and I are not going to be holding this for 10 years. It's not going to matter for you and I, but for the guy who's been in this for 10 years, he's down 99%. He's not going to be a buyer of this. He doesn't really care about it. I just noticed that looking back a little bit.
Okay.
All right, so we wrapped up the top ideas. The one question we had for this week, Shake, the main one was if you can kind of go over kind of pre-market, post-market trading.
What specifically? Just like
it's just how come 100 share order can flush a stock 5-6% when during the day it wouldn't move it at all.
So when the stock market's open, it's a very liquid market. That's why the bid ask and the SPY is always 1 cent away from each other. There's all the market participants are involved. It's a very liquid market. So to move a stock, it's going to take a lot of money, right? You got to buy a lot of size versus a non-liquid market, like when it's not traditional trading hours, market's closed. These things are very illiquid because people aren't trading. So to move these stocks, the bid and ask on the SPY will be a few dollars, or not the SPY. That's always very tight. But like we'll look at like I don't know some names we usually trade. I don't know any of these high beta names. They'll have like $5-6 spreads when they usually have 10-cent spreads because no one's around trading these things right now. So 100 shares taking the offer when it's $4 higher, it's going to move the stock $4 higher. But if it doesn't have that huge volume behind it, this is why we wait for the intraday, then the move is usually not real. So we typically avoid pre-market and post-market trading. There are situations where it does make sense, but for the most part, it's typically an avoid. Wait till the market's open. Wait till everyone's playing the game to play.
Shake, for your trading out of 100%, what do you think percentage would be your pre or post-market trading?
So I'd say 99.8% is during market hours, 0.2% is during regular trading, during pre-market or post-market when something I'm in gaps up huge and I'll take some profit off after hours, or just things of that nature. It's really only profit-taking situations. I'll sometimes trade earnings when I just kind of want to sling it, but that's not why you should do it.
Yeah, and the person who asked it, and again, if you think even like when we were on the prop test, like the first thing like we always wanted to do was like we wanted to trade earnings after hours because it was just different. It was like more exciting, and then after you do it a couple times, you're like, it's just so much easier to just trade during the day than to try to.
Well, I'll never forget the story. Oh, this doesn't trade anymore. I'll never forget the story. My buddy, we don't have to say his name. I used to sit next to him at the desk when we moved to that other room. He was like a great trader. He was going so well, and he upticked. He heard. Remember, we used to have the squawk guy, and he would always be shouting out the earnings. So it was Whole Foods beat earnings, and he meant to uptick 400 shares, and he accidentally double took the offer twice, bought 800 shares. So he was up. Things spread up $1, and then it quickly spread down $10 without him being able to hit out because you can't just mark it out. There's no market orders in after hours. So that ended his career right then and there. It was a 2-minute thing. He just like walked out of the room. He said, I remember he's like, fuck this place. Never saw or talked to him again. There was a guy I sat next to for months. That was kind of the things we learned not to do at the trading firm.
Yeah.
That's why we say don't do it. You know, it's much more important to be in the game tomorrow than to be involved in this fucking after hours move.
Yeah, 100%. I do remember that trade. That guy.
Don't laugh.
I mean, anyways, all right. So good trade, bad trade. You want me to start, Jake, or you want to go?
I've been talking a lot. You got it.
All right.
Start.
So pull up the first chart.
Oh yeah, I'm learning.
All right, let me know when you get it up.
Got it.
All right, so BXP again. This is I drew this horizontal green line to kind of show why we focus on buying more than the third time through resistance. So we can see going back in April it held 108. In June it held 108. Back in November it could not get above 108. And now this is like the 6th or 7th attempt where this BXP was finally pushing up through 108. Very nice tight flag, looked great. Just didn't have the follow through. So took the trade, took it through that 108 area, but it literally went $2 higher, basically doji at highs, basically showing us indecision, showing the buyers aren't there. And instead of giving this back verse, the proper pivot, verse 99, even verse 105, it went $1 or $2 in my favor. It wasn't worth giving it more room, kind of hoping and praying that these 5 basically dojis at highs are going to just change course and it's going to continue higher. So I took the 1% loss in this. Again.
A question for you on that one.
Yeah.
So now when you're looking to re-enter, which I'd imagine you're going to keep watching this one, if it pulls back to let's say 100 and turns that area to new support, are you going to look to buy there, or are you just going to simply wait for like a bull flag in this 110 area that's like really solid?
So I would definitely look for. So even going to the next one, we'll probably kind of go to that. But again, I'd look for if it pulls into 100, because again, buying 108, I had to kind of be perfect in that trade where if I'm buying it up off 100, if it pulls in, and I could buy it up through 101, verse 99 or 98, I'm in a much better position where I can even further buy through 108 down the road. But I'm not going to, that's, again, I would be buying up off support. That would be the short answer.
Okay.
So going into Walmart kind of goes into that same, kind of your same question. So if you pull up the next chart.
I got it. I'm in this.
All right. So if you're looking at like 140, in this same example, like for Shake's question, it was, for Walmart, I was looking to buy up through 148. This was end of February, buying up through that 148. It gapped down and it just sold off basically, 10 days in a row. So initially my plan was to buy through 148, never went. And as it started to break back down, again, we don't try to catch the pull, we don't try to catch the low, we want to wait for it to consolidate or show us a tight entry. So as it pulled into that 126 and held and started to reverse, we had 4 or 5 days where it just couldn't break 130. And it was a very simple trade. We put in a buy stop above 130. Shake, I believe you were in this with me as well. Yep. You might still be in it. Yeah. So again, for me, I bought it up through 130. The initial stop was verse 126. So I was risking $4 in the name. After we had that, very nice first day. In the last 3 days, it's kind of just grinded higher. I've now just moved the stop to break even. So if this trade fails, I can care less. I will basically lose, 5 or 6 cents per share. And if this can if it can kind of base out here and flag for a little bit, I have no problem buying up through 135 or 136 to be in for that bigger move into the 150s. So that's kind of like that BXP. I was buying it kind of too late. We're now in this Walmart, we're buying it off of support. I can continue to dollar cost average at higher prices if it sets up If it doesn't and completely reverses tomorrow or the next couple of days, I'll lose very little. And that's kind of the main goal, at least for my trading, is to try to lose as little as possible, compared to the guy who was...
And I want to point out something that's important. You didn't buy this, because I'll talk about this, my good trade, bad trade. You didn't buy this, it didn't retest the level for one day and you bought it. It gave us nice consolidation, a nice level to buy.
Yeah.
Just pointing that out.
Yeah. And that's even if you pulled like CRM really quickly, that's kind of the same thing where, again, we traded this CRM recently up through that 230 breakout up into like that 240, 250 area. And as it came back down, down through like that 210 area, it like looked like an easy buy, like buy up through 220 versus 210. But it just didn't have a couple days to really consolidate. Where now, again, it's still not setting up. And that's why it was just a trade you didn't have to take. It just didn't set up. Where Walmart, it got beat up for 10 days, and then it set up, and then it gave us that move higher. And on the flip side with the market, up 7, 8, 9, 10 days, eventually that trend shorter term has to change. Same with stocks. Mm-hmm. So again, that's my little piece. And then let's hear your lessons.
Start with my bad trade. So the important part I was talking about was the few days of consolidation. So I bought this. All right. So this is where I made a mistake last week, and it was the first day, second day after we rebounded, and we had the clubhouse, and I was talking about like how I didn't want to get suckered into the buys, and I got suckered into this DoorDash. It was the first day after this bounce back at this 147.21. It had an intraday flag right below that area. I bought the new highs. And I was literally my price was right around that high a day. I was in the money for like 5 minutes. Just one of those trades, like, he's going to fail like the whole time you're in it, but you don't want to change your game plan or anything. So me just getting involved in that way too early without all that daily consolidation was my major mistake. And now it's setting up. Now you see this alert, the orange on the screen, that's an alert. I'm gonna look to buy this tomorrow on the way up because it has that consolidation. The setup completely changes with the 4 or 5 days of consolidation. That is so important. That's why I pointed out with Walmart, and I'm pointing out with this DoorDash here. It just completely changes how the setup is looked at. Mm-hmm. So good trades. We talked about this AbbVie. That one triggered today, but this Roblox I did really well with today. So here's from the newsletter last night. You can see my plan. It seems like this Roblox will be the next big thing. Nice initial move in the IPO, looking for a pullback buy in the 64, 68 area. Want to see that intraday reversal to the upside to get involved. So what I'm looking for the stock to continue to pull in and reverse, finding some support, and then I'm going to look to buy it. And it just worked out perfectly today. Let me lose all these moving averages. So it worked out perfectly today, and what I'm looking at is the 15-minute chart. When you're looking for reversals, the lowest time frame you can look at is a 15-minute chart. It's very important. So what's it do? I was looking for 64 to 68 area. It pulls into 66.35, reverses just under 68, and I buy 68 versus 66. So now I'm in great position with great stock. Now the trade's still in motion. It's only day one, but this thing looks just like it's ready to catapult through highs. I have a great stock. I got the right stop. So now I'm just in a great position with this one. So just made a clear plan, executed the plan. Nothing you could say did anything wrong there. Just some good shit there.
Just amazing. Just say it's amazing trading.
This is the good trade, right?
Yeah.
The DoorDash is trash.
So with this RBLX, and then you jump at the 15-minute. Like on the 15-minute, we can kind of see there's a little bit of resistance at like 74. Now that you already have this, really good stock from 67, if it starts to flag out again up through 74, would you look to add into it, or you just have enough stock where you're like, I'm good with my costs, I don't really want to pick up any more?
Tricky. I mean, I have to see how it sets up. I do have good stock, and I do have a good enough position where I don't need to add. So, what do we do with adding? Usually, it fucks up the whole trade. You tighten up your stop and all these things. So I don't want to mush the trade. If it flags out under this 74, 75 area, the hourly chart's easier to look at for these things. Under this area, then I would treat it as a whole new trade and look for a momentum setup. So definitely, but that would be a different trade. I'd still keep this 66 stop on this stop, and then I would have whatever the momentum trade stop was on that stock.
Gotcha. All right, was that the two you had for the two you want to go over? That's it?
That's my two.
All right, book of the week.
Book of the week, I'm taking them back. So I mean, I haven't started quoting this in the Alpha Chat. Just the most classic trading book there is, Trading in the Zone. I reread it this weekend, or I spent a lot of time on his YouTube, same lessons, and it's just something you can listen to this, no matter what stage you are in a trader, and it's so helpful. It's in the very beginning stage, it's super helpful. Even as you advance to where I'm at right now, it's super helpful. So I got my yearly reminder of how great this book is. I kind of just zenned out for the weekend, thought about my trading, and I came in, ready to go today. And I feel very clear-headed. I'm seeing things well. So, I credit this book to a lot of my success in general, and just, a lot of, psychological success in the trading world.
Mm-hmm. Nice.
What you got?
All right, Jake. I got another Jesse Livermore book. It's How to Trade Stocks. I'm sorry. How to Trade in Stocks.
Yeah.
So there's actually, I read, and we talked about another Jesse Livermore book like a month ago that I read that was, again, a really good book. Similar to the one
that I read, and then you read
that
after.
you read, then yeah.
Yeah,
right. Well, I did finally finish Power vs. Force, which was the most painful read of my life. But anyways, back to this book. There was one good story that they don't mention in the other Livermore book, where one of the things he was doing at the end of each year, and in this one year in particular, he made $50 million. Back in the day, you actually kept cash in the bank. The bank would have your $50 million. So he goes to the bank at Friday, like 5 o'clock. They take it down to the vault where his $50 million in cash is there. The vault locks at 6 p.m. So he brings food for the weekend. He brings his Manhattans, his drinks he's gonna drink, and he brings his trading journal, and he sits in the vault for the whole weekend and just kind of chills with his money and reviews everything.
Oh, that's sick.
And then Monday morning they come at 8 a.m. and they open the vault, and then he comes out, and it's the line between the manager and him, and the manager's like, Jesse, if people knew this about you, they call you eccentric, and he's like, they already call me eccentric, he's out of his mind. But it was just even I used to do this back then, I would just keep cash for me, and it was just made no sense. But when you see this, it's all right, maybe let's take a little cash out and play with it before we pay.
It's also it's all very motivating to see in front of you and things like that. It makes it so much more real.
Yeah.
When we used to trade before we were taking checks, at the trading firm back in the day, when you're just starting your account, you don't take a check, until you're profitable and things like that. And it was just numbers on the screen, and they were never really real. They were obviously it was real, but you didn't factor the realness to them because it was just green or red on a screen. Mm-hmm. So I get it.
And that's what he was saying. He's he needs to touch it and feel it so he knows it's real. And then what he was doing that Monday morning was he stuffs his suit jacket with as much 50s and 20s as he can, and he just goes on a shopping spree for 2 weeks. So but again, guy make $50 million. There's only so many 50s you can stuff in a suit jacket, so he probably was spending 0.1% of what he made. But again, that was the first little story that wasn't in the other book that I thought was pretty funny.
That's good. I never heard that one. That's good.
Yeah. So, Shake, maybe you have to read one of the books I recommend now.
Yeah.
But yeah,
Livermore, I'm always fucking down.
Yeah. All right. I think we're good. We're done.
That. What a day. All my things recorded. All right. All right, guys. Till next week.
All right. See you later.